welcome to TV Asia Telugu Talk Show with Experts. The Talk Show with Experts మళ్ళీ ఒక కొత్త టాపిక్ తోటి మన ముందుకు వచ్చేసిందండి. సో మీరు అందరూ కూడా చాలా ఇంట్రెస్టింగ్ గా ఎదురు చూస్తున్నారని మాకు తెలుసు. సో అందుకే ఈరోజు అనిల్ గారు మళ్ళా రియల్ ఎస్టేట్ స్ట్రక్చరింగ్ అండ్ ట్యాక్స్ ప్లానింగ్ గురించి ఒక సరికొత్త టాపిక్ తోటి వచ్చాము డిస్కస్ చేయడానికి. అండ్ అలాగే ఈ ప్రెసిడెన్షియల్ ఎలక్షన్స్ ఎలా ఇంపాక్ట్ చేస్తాయి ఈ రియల్ ఎస్టేట్ అనేది కూడా మనం ఈరోజు డిస్కస్ చేద్దామండి. అనిల్ గారు, వెల్కమ్ టు ద షో అండి. హౌ ఆర్ యూ?
థ్యాంక్ యూ అండి. థ్యాంక్ యూ లక్ష్మి గారు. థ్యాంక్ యూ వెరీ మచ్. ఐఎమ్ డూయింగ్ వెరీ గుడ్. థ్యాంక్ యూ.
థ్యాంక్ యూ అండి. సో అనిల్ గారి గురించి మనం ఎవ్రీ వీక్ చూస్తూనే ఉన్నామండి. సో మనందరికీ తెలుసు హౌ ఎక్స్పర్ట్ హీఈస్ ఇన్ దిస్ ట్యాక్స్ ప్లానింగ్ ఫీల్డ్ అనేది. బట్ ఇంకొక ఎవరైనా కొత్త వాళ్ళు యాడ్ అయి ఉంటే వాళ్ళ కోసం ఐ వుడ్ లైక్ టు యాడ్ ఫ్యూ వర్డ్స్ అగైన్ టుడే. So he has 15 plus years of experience in finance profession as finance controller, CFO and other senior executive positions. He worked in Amazon, Starbucks, PwC and Sun Edison. He is helping his clients take advantage of tax planning opportunities and strategically setting up the clients' businesses for success. So this has also added in his drive to start helping business take back control of the economy and continue to operate through the help of the SBA loans. He has a professional team of CPAs, chartered accountants and other financial professionals and he is wonderful in helping his clients and he is very friendly. So please, if at all, if you have any questions and any of these tax planning related questions, please you can call directly AG Fintax and Anil garu will be happy to help you. Anil garu, let's start the show andi.
Thank you andi. Thanks Lakshmi garu for the intro. Sure andi, we'll get onto the topic.
Yeah. So ఈరోజు మనము రియల్ ఎస్టేట్ స్ట్రక్చరింగ్ గురించి డిస్కస్ చేద్దామండి. సో లెట్స్ స్టార్ట్ విత్ వై ఈ స్ట్రక్చరింగ్ ఈజ్ సో ఇంపార్టెంట్ వెన్ ఇట్ కమ్స్ టు రియల్ ఎస్టేట్ అండి.
Sure andi. So before getting into the structuring, just I want to give it high level. In our Indian community, as this is most of Indian communities and we speak Telugu, most of the people who are living here. So this real estate is always in the top 3 favorites for the investment and for our Indians. Either they invest money in stock market or in the real estate or any other opportunities. So stock market and real estate are always in the top favorite for our Indian community. So and I keep getting so many questions on this real estate investment. What strategy we need to use, how to save taxes on the real estate planning, or how to structure this to protect assets, because we left our countries and we settled here, and we always need to ensure that there are no setbacks to our wealth. After a lot of hard work, after so many sacrifice, we built our wealth. But after building a lot of wealth, I have seen so many cases where they don't take right steps to protect assets. Once you build the assets, it's your responsibility to ensure that you are protecting that wealth. If you don't protect that wealth, there is a lot of opportunity there to lose that wealth. So as always, there is a risk. So this is one of my favorite area, and real estate and stock market both are my favorite area, because I talk to hundreds of individuals or business owners all the time, throughout the month, throughout the year. Okay. So now coming to the topic, so choosing a right legal entity for your real estate investments business is a very important decision that has legal and tax consequences. So we should not, people think, hey, what is the best legal way to protect the assets? No, it's not only legal. You should also think about taxes. Every dollar you save is equal to every dollar you earn. So every penny is very important. So then if you see, after my research, after talking to so many high wealthy real estate investors, I'm not talking about real estate agents here, I'm talking about the real estate investors. So what I understand is the skill of choosing the right investment is not enough. So if there are some 10 options, you can go and choose, you can do all your analysis and you can pick a right investment. That is not enough. You also need to look into how to legally protect your assets and how to organize and operate this real estate property in a legal way to protect your assets. So which is very important. So chala mandi ante, if you look into the high net worth individuals, that is what they do. The just starters who don't have a lot of knowledge here, they do the mistakes. So what I'm trying to say is, choosing the right legal entity for your real estate business will play a vital role in building your assets and protecting your assets. So that's why it's very important to find a right legal entity structure for your real estate investments.
Good, Andy. Thank you. Actually, this is very important, Andy, as you said, because we are a first generation that we came to US, and so we don't know much of a lot of things, because we're the first generation. We have to lay the path for the next generations, kabatti. So we need to know a lot of things. And as you said, I totally agree that earning is one part and passing it on to your next generation is another part, that you have to take care of it, no matter what. So nice, Andy. So next, what did you mean by safeguarding business and personal assets, Andy? So how can we?
Yeah, as I said, once you build your assets, you need to protect your assets also. That is also your responsibility. Otherwise, if even very small activities, small events may cause a big damage to our assets. So what we need to do, we need to build a small layer between your business and personal assets. Always business is different. You are doing some investment in some real estate, that is considered as a business. You are investing some money because you are expecting some return on your investment. At the same time, you also need to ensure that you are not commingle both personal assets and real estate, the business assets. So when you do it, you are in the problem. If you mix both, you will be in a problem. So always you need to maintain a small layer of protection between these personal assets and business assets. If you fail to lay a strong layer between these two, you are at risk of losing your personal assets such as home, cars, any savings or anything, whatever you own. With a lot of your hard work, you might have earned it, but they are at risk. So how to do this, how to protect? There is a very small documentation is required which can protect your assets between business and personal assets. So what I recommend, always think about the long run. Don't think about the short term. You may be thinking that, hey, nothing will happen to me or nothing will happen to my real estate property. No, that is wrong. So you always need to think about very long term, and you need to consider about how to protect your assets. Maybe 10 years later, 20 years later, you don't know what's going to happen. So how you need to think about in the future, forecast. If you are investing, you are a businessman. When a business, one of the most important feature a businessman should have is visionary. So what may happen after 10 years? What may happen after 20 years? You need to think about that, and you also need to think about the tax implications. Then you need to build your safeguarding towards surrounding all your assets. So that's what I meant, safeguarding your assets. So why it is important? That's what.
Yes, you're absolutely right, Andy. Because always long-term plan is very important anyway. That covers even any short-term things also, if at all needed. So very true. I totally agree with you. So can we lower the taxes, Andy, by choosing the type of business entity effectively?
Definitely yes. Chala mandiki teliyadu. Most of people think, hey, what is there in that? I mean, many people don't even know that real estate properties can help you to save a lot of taxes. So there are different tax planning strategies we can implement it. But you cannot, but when you build your assets slowly, one after one, when you are building your real estate assets, you cannot take a risk to expose yourself to a lot of liability and heavy taxation. If you don't properly structure your real estate investments, you may result in paying lot of taxes. Why do you want to take a lot of exposure? So you must consider, when you are designing your structuring, you must consider some key factors like what is how much personal assets you have, how much you are trying to protect, and debt to income ratio, and tax laws in your state. Every state has a different tax laws. An example, I have an asset in Texas, but but can I open a legal entity in Delaware state? Will that helpful? There are different parameters we need to consider. So what tax, if the asset is located in Texas, we need to consider what are the state laws in Texas. So it's very important to know in which state you are living and in which state your asset is located. So they pay, and considering all those parameters, you need to take a decision how to structure your real estate investments.
Okay. So based on the state rules, we have to follow the structure, right? Nice, Andy. So what are the options that we have when choosing a legal business entity? I mean, options chooses.
Sure. Okay. Before I explain what are the options we have in choosing the right legal entity structure, first I want to make it clear one thing. Every situation is different, and every decision, when you structure it, we need to look into what is your personal parameters are there, like what is your specific need, what is your goal. Do you want to protect your assets in the long run, or are you looking for more tax saving strategies, or you what if we have any other goals, anything, we need to look into that. So every situation to situation it differs. For one person, structuring might be different. For the other person, the structuring might be different, because there are different parameters are there. But before I get into the more complex structuring, I want to start with very simple structuring, which is a sole proprietorship. So I covered these types of legal entities in my earlier live shows. So you can refer to the old videos, recorded videos. What is a sole proprietorship? So sole proprietor is a very simple business structure, and in most of the cases you don't need to register anything. It is not a legal entity, it's a legal structure like sole proprietor. There is no liability protection. So what does it mean? What is the purpose of, in general, many people ask me, what is the purpose of having a legal entity? Why do you need to have an LLC? LLC will protect you from any legal liabilities or any risk. But sole proprietor, it is just equal to your personal responsibility. So there is no legal protection for you through the sole proprietorship, but still you can buy your property on your name. If you buy a property on your name, it is called a sole proprietor. But some states may require sole proprietor registration. Sole proprietor is nothing but a small business owner with no entity setups. Okay, and whatever the sole proprietor owns, assets, income, anything, that is nothing but your personal. You are getting the money, or you are building your asset on your personal name. There is no difference between business and individual. Both are same here. So sole proprietor is single member. Single member is what I can become. When I think about a business, I'm a proprietor. I don't need to register a legal entity, but just I can think about this. By the time I think about the business, I am already a sole proprietor. So it's by default. That's what the act says. You are by default a sole proprietor. You don't need to register anything on your name for the sole proprietor. So what I'm trying to say here, whatever, if you buy any property on your name, it is considered as a sole proprietor. So there, where you carry all the risk, and you are liable at individual level for all the income and the liabilities.
So, but it is as good as that you are running a business, but no need of a legal entity, right?
Yes, you're right. Correct.
ఈ sole proprietorship lo, what are the pros and cons and legal, and how good it is, or what is the better options than having sole proprietorship?
So the first advantage with the sole proprietor is it is very easy to start. no paperwork required. The way you think, the day you think right now, like Lakshmi Gauri, just she wants to think, invest in the real estate. Come on, you are already sole proprietor. It's just by default. Okay, it's very easy to start a business or as a sole proprietor, but few states required law. Few state laws requires a registration. So some states like Georgia, so they need a registration, but in Florida they don't need a registration. So if you want to do any business on the sole proprietor name, you have to register in Georgia state, but in the Florida state you don't need to register. But if you want to, example, you are like example 𝗦𝗁𝗶𝗶𝗶𝗃 or Anil Grandhi. Okay, just I'll take my example. Anil Grandhi today wants to start a business. I'm a sole proprietor, but I don't want my name to be there. I want to say Grandhi Real Estates, so which is my last name. So then it is called as DBA, doing business as. So in those cases, if you want to register, if you want to get into agreements as a Grandhi Real Estates, so then I need to register with the respective state departments. Otherwise, it's not mandatory that you have to register sole proprietor with your state secretarial board. And the other thing is, the other advantage I shall say is, you don't need to file any separate tax returns. An example, if we have an S corp, if we have a C corp, if we have a partnership, you have to file a separate tax return on top of your individual tax return, which is a 1040. On top of that, you need to file two separate tax returns, one for individual, one for the business. If it is a sole proprietor, you don't file a separate tax return. It's just only all together. It's only one. But the bigger problem with the sole proprietor is asset protection. So the major disadvantage, the most important disadvantage everyone should think about setting up a sole proprietor to buy a real estate property is liability protection. So if something happens at your property, if any accident happened at the site, like example, someone fell down from the second floor to the first floor, or some roof fell down, or some fire accident, if something happens, yes, there may be people say that, hey, I have an umbrella insurance, I have some rental insurance, whatever insurance you have. If something happens because of because of the negligence, or insurance company says that, hey, I don't cover this protection, I don't cover this event, so then you are at the problem. So then the rent, if example you invested a property, you rented out the property, but the tenant wants to file a case on you because you didn't maintain the property as expected, or otherwise some mechanic came, some carpenter or some mechanic came into our house to do some work at home. He met an accident and we are responsible. He has every right to file a case on us, if a illegal case. So then in those cases, if you don't have a legal protection like LLC, then if you're a sole proprietor, you are personally liable to take care of all those responsibilities and liabilities. So the summary is, it is very easy to start, but you carry a lot of risk. What do you want? You want a very easy one and the least expensive and easy one, and you want to take the risk in the future, or you want to plan properly. Don't even it take a couple of days or maybe a couple of weeks to start a legal entity, to set up a legal entity and do the transaction. It's up to you. How do you want to start your business, or how do you want to start your investment? So those are the advantages and disadvantages of a sole proprietorship.
Yeah, so you have to choose between whether you want to take the risk personally or you want to take the risk as an entity.
Yes.
But either way, you are a sole proprietor and you can start a business without even having a legal entity.
Right, correct.
So generally, when it comes to real estate, the common or the most structure that we hear is LLC. And generally, మనకి ఏ రియల్ ఎస్టేట్ కంపెనీ చేసుకున్న మోస్ట్లీ LLC అనే వింటుంటాము.
Correct.
So why is it so popular in real estate?
Correct. For long-term investors, Long term means the people who if anyone wants to hold the asset for more than a year, it is considered as a long term. So if you, for long term investors, limited liability company LLC are the greatest option, and it is the very common entity choice people do. So why it suits for the long term investors? Because this property, wherever they investing, it helps in two ways. One, they get a rental income, they get a steady rental income, and also they get a long term capital appreciation. So considering those scenarios, those advantages, considering those parameters, LLC is very popular for the long term investors. And as the name indicates, LLC, limited liability company, the liability is limited to the investor. Whatever example, I bought a house for $500,000. I invested 20% of the down payment, which is $100,000. If something happened in the home, maybe a fire accident, maybe some accident happened in the home, and if anyone files a case, the maximum money at risk is my $100,000 only. It's not $500,000. Or the person may come and like example, handyman come and he got injured. He may claim even $1 million on you. He may file a case for $1 million as damage, but you are liable only for $100,000, which is your investment. To the extent of your investment, only you are liable. That is the most important factor when you think about LLC. But the most very common mistake what I notice is, when you have an LLC, you are obligated to maintain LLC transactions in a separate from personal transactions. Many people combine both personal and business together, all the transactions, maybe bank transactions or any business expenses, but you are not supposed to do that. So there is a concept called, if you do any mistake, that will pierce the corporate veil. So you have a protection layer which is protecting you for personal assets from the business risks. But if you combine both personal and business, all expenses and everything, you may be having just an LLC, but remaining everything you combine with your personal, then you are at the problem. It may result in piercing the corporate veil.
Lot of information, Andy. We generally don't know actually. What is this corporate piercing the corporate veil అనేది అన్నారు కదా? What does that mean, Andy?
Okay. So if at all, if there is any unity of interest between you as individual and an LLC, అంటే there are some common transactions you are using between LLC and personal, both together, and if you involve into any fraud, if you are misutilizing anything, or if you are claiming some expenses under the business, whether knowingly or unknowingly, then IRS has a right to go back and dig into they can dig into all your transactions, and legally they have the right to get into your personal assets. Like they can pierce the corporate, they can get into your personal assets if you don't maintain the proper compliance, proper accreditation, or if you don't separate your personal and business. So if at all something happens like that, and if IRS or any courts find that you are combining, mixing everything, just you have an LLC, but everything is only personal, all transactions are the personal, you are getting into the agreements with the personal on the personal name. So in those cases, this LLC will not help you to protect you from legal liabilities. So even you have an LLC, you always maintain it. Otherwise, legally they have the right to get into your they can pierce into the corporate veil, the layer what you have around you, they can get into the picture.
So yeah, విన్నారు కదండి, ఏ ఎంటిటీ అయినా వాట్ ఎవర్ ఇట్ ఈస్, ప్లీజ్ ఫాలో ద రూల్స్ అండ్ రెగ్యులేషన్స్ అండ్ try to maintain the compliance. Whatever is required, it could be insurances or it could be any other documentation, anything. So as an expert advice, Anil garu cheppedi ఏంటంటే, please maintain proper documentation and try to maintain the compliance rules and regulations. So which is the safe way to maintain an LLC?
Correct. All right. Correct. But LLC, you don't need to worry much about LLC. LLC is a very simple documentation. There is less paperwork, less compliance, but you need to maintain that. You need to maintain it separate. It's not so complicated like C Corp or S Corp, but LLC is a very simple form of a legal entity. But still, you need to know what are the rules for an LLC.
Compared to any other structuring, maybe LLC is very little documentation and easy to maintain.
Yes, you're right.
So it's very, you just said that it's perfect for investors who buys and hold for long term అని అనుకున్నాం కదండి in an LLC. Why is that so? అంటే long term purpose, why is only LLC?
Got it. So LLCs are good for people who look for investing in a real estate properties and they want to hold it for the long term, because when you invest some property, it is considered as a capital asset, and the capital asset tax when and in the future, if you want to sell the property, the tax rates for the long term capital gains are different than the short term capital gain. So if you are thinking about the short term capital gain, and if you are in the business of investing selling like a trading type, you're just investing selling, you buy a property, sell it in the next 3-4 months, then the basic structure of LLC may not be the efficient way to save taxes. But if you are a person who just invests and okay, let's long term, majorly there are a couple of two major reasons why people invest in real estate. Number one, they look for long-term rental income, and number two, they look for long-term capital appreciation. When there is a capital appreciation, it may result in long-term capital gains. If there are different advantages when you have the LLC, if it is a long-term capital gain. If it is a short-term capital gain, so then it's completely different topic. So LLCs may not be sued if you want to sell the assets immediately or buy sell, then LLCs may not be the right strategy to use.
Thank you, Anil garu. Let's take a short break and come back in the. So TV Asia Telugu is available on World BB TV, Dish Network, YouTube, Facebook page is there, and website is there. So please, whenever you have some time, please log in and watch previous shows, whatever you have missed, and you get wonderful knowledge and entertainment out of these shows. Thank you so much, and we'll come back.
ఎక్స్చేంజ్ 8,000 రూపాయల బ్యాలెన్స్ మ్యామ్.
ఇవ్వనక్కర్లేదమ్మా, 8,000 మీకే వస్తాయి.
ఎస్ మ్యామ్, మేము కేవలం హాల్మార్క్ 916 గోల్డ్ నే అమ్ముతాం. ఇంకా మీకు దొరికింది 100% ఎక్స్చేంజ్ వాల్యూ.
క్వాలిటీ, ఇది మలబార్ ప్రామిస్. ప్రామిస్ ఇస్ ఎ ప్రామిస్.
ఇది మా హీరో అల్లుడు కోసం ఫిట్ గా ఉంటుంది.
పర్ఫెక్ట్ గా ఫిట్ అవుతుంది. ఇది మైండ్ డైమండ్, 100% క్వాలిటీ.
సార్, ప్రతి మైండ్ డైమండ్ న్యాచురల్. ఇంకా మేము 28 క్వాలిటీ టెస్ట్లు చేస్తాం.
28 టెస్ట్లా?
ప్రతి డైమండ్ జ్యువెలరీతో పాటు ఇంటర్నేషనల్ ల్యాబ్ సర్టిఫికేట్ కూడా.
కళ్ళు మూసుకుని మీ హీరో కోసం వజ్రాలను తీసుకోండి. ఇది మలబార్ ప్రామిస్. ప్రామిస్ ఇస్ ఎ ప్రామిస్.
Welcome back to TV Asia Telugu talk show with experts. So here is real estate structuring గురించి మనం డిస్కషన్ చేస్తున్నామండి. సో అనిల్ గారు, let's start with the different section. And so far we discussed about sole proprietorship and LLCs.
Yes.
So we common గా that we hear about limited partnership గురించి కూడా. So what is that limited partnership అండి?
The next level of, first we started with sole proprietor LLC. The next level of structure, we are getting into more complex matters now. Limited partnership ante, there are two types of partners. It is also an LLC type. It's a legal entity structure, but it involves two parties. There are two types of partners: general partner, limited partner. General partner is responsible for all the debts, judgment, liabilities of the business and business operations. They are responsible. If someone files a case, general partners are liable. And there is a limited partners where they are only responsible only up to their investment in the business. So whatever they invested, if something happens, they lose their investment only. But general partners, they own the liability also. It's a limited partnership, it's called. So the other thing is LPs are very popular for real estate development businesses. So if you see, we always hear multi-families. Our Indians invest a lot of money in multi-family investments. In those cases, if you get into more details, then you identify these general partners who run the business, who takes care of all these operations, getting the funds, running the business. But there may be some hundreds of individual investors. They are considered as a limited partners. They are called as LP. So and how in the other major difference, general partners and LP is, general partner retains all the management power, management control. They have the power of the company. But limited partners, they may have a voting rights or they may not have a voting rights, but they don't have a lot of power to take the decisions. So, and the other major difference, what I shall say, is capital investors, like who wants to invest in the business, but they don't want to get into operate like multi-family investment, real estate developers. They don't want to get into the day-to-day transactions. So, but still they want to invest maybe some $10,000, $15,000. The property may value some millions of dollars. But capital investors are the small size investors who wants to invest, but they are not interested in day-to-day operations. They can take the role of limited partners and they can be part of a very big investments, but they don't own any responsibilities. So they don't own any liabilities. So that is how the LP structure is designed.
Okay, so can you give some pros and cons of this limited partnership?
Sure, Andy.
What you just mentioned.
Okay, so what are the pros and cons? The first of all, limited partners, because they are not actively participating in the business, if they get any income from this, like maybe K1, every year they get a K1 and they don't need to pay. There is one more tax called Self-Employed Contributions Act tax, SECA Act. It's a separate tax exemption they have. But if you are an active general partners, they need to pay this tax. For the limited partners, they don't need to pay this tax. And the other important thing is general partners. The advantages are the limited partners don't have any liability. If something happens at the property or at the site, they don't have any liability, personal liability. But general partners have the personal liability. So they can go back, apart from the assets, even they can go back to what they own. They can look into this. So those are the major difference between our pros and cons. What is the advantage? Whether you want to be general partner or you want to be the limited partner, it's up to you what level of risk you want to take, whether you want to participate in the business operations or not. And just one more thing, few states setting up limited partnership entity is a bit expensive compared to the LLC in few states. So generally state secretarial boards, they charge some registration at the time of incorporation, they charge some fees. They charge annual maintenance fees. So if it's an LP, it is a bit more expensive than LLC, but it has more different type of partners they can have. So if we both want to work, and if you both want to invest in some business development, you can become a general partner, I can become a limited partner.
ఇక్కడ నాకు ఒకటి అర్థం కాలేదు ఏంటంటే, ఇప్పుడు the structure is limited partnership ఉంటున్నాను, and there in that structure you can become a general partner or limited partner, right?
Yes, correct.
The structure of the company is limited partnership.
Limited partnership, yes. It's limited. It's not completely protected. In other words, it's not like LLC. So no one can cross LLC line to go and file a case on you.
Mhm.
Okay, no one can touch your personal assets. But here, there are two types of investor partners.
Okay.
One partner is safe, the other partner is at risk.
Oh, okay. So if it is a limited partnership, can all the partners can be the limited partners?
No, then they can go for LLC.
Oh, okay. Okay.
Only when you want to diversify, split like this. So then only this LLC, like example I said, real estate developers. If any of the viewers do investment in multi-family investments, then they are very much familiar. General partners take a big bunch of the profit sharing. Example, they take some 20-30% of the total profit at phrase, because they take a lot of risk. They get into the responsibilities. They take more responsibilities, but they take more share for that, more profit share. So the limited partners, they just invest and just they forget it. So they get a limited share of profit.
Yeah, completely makes sense, Anil.
Yes. So it's all about, as I said, it's situation to situation, it differs. In the first, and limited partners are very popular. So everyone may not go for LLC. Like example, if you are a single member, if you just want to buy a property, some rental home, residential home, yes, you can start an LLC. But if you want to build an asset, a big asset like a real estate developer, or if you want to run a multi-family investment where it is millions of dollars, so then LP may come into the picture.
So depending on what are the structure
requirement, yes, what is the goal? What is the need? Based on that, we'll design the structures.
So many factors comes into the place why you need this kind of structuring.
Yes.
Depending on that, then we can have either sole proprietorship or LLC or limited partnership. And now let's go into the next structuring, Andy, which is S Corp and C Corps. So how can you explain what are S Corps and C Corps, and how good are they as real estate entity structures?
S Corp, as most of the viewers know, S Corps are considered as a pass-through entities. So for the tax purpose, it's like it's like an LLC. LLC, whatever income you get in LLC, that is part of your 1040, which is an individual tax return. Again, in the same way, if you get any income from the S Corp, that is also a pass-through, and it will come and include in your 1040 individual tax return. But there are some advantages with the S Corp. So if you are a flipping real estate agent, real estate investor, like you buy an asset, you build, you do some patch up works, or otherwise you hold the property only for just for a couple of months or weeks or days, and you want to sell it back. It's like operating. You are actively involved in the situation. So if you are such type of investor, you are named as a dealer. So in an example, real estate people whoever invests in the real estate actively, they know this. What does this mean? Dealer. Dealer is the person who takes the property, invest and try to do some updates in the home, and they sell the property for higher price, or just take the property, hold it for some time, maybe very short span, then they will sell it again. So then buy and sell. That's what their day-to-day activities. So they are that is called as flipping real estate investors. They are called as. For them, S corporation is a very good option to choose. So why S corporation? Because S corporation, if you get any income from S corporation, you don't have to pay social security taxes, which is in social security tax and Medicare tax. There are two types of taxes. 12.3% social security tax you don't have to pay if you have S corporation and you are in the flipping business. But if you are in LLC, not in S corp, if an LLC, and if you do this flipping business, you have to pay social security tax on the entire income, which is 12.3% you have to pay on top of your federal income taxes and state income taxes. So you save taxes within S corporation if you are in the flipping business.
Oh, okay. So depending on the business type, you are is it so?
Yes, nature of business is basically depending on the nature of business. You want to just invest and relax for a long time, then it is an LLC. If you want to develop a property, it is an LP. If you want to buy, sell, then S corp.
Okay. So how about C corp and how it is different from S corp?
Sure. C corp is also a good strategy for some people, where people look for more number of investors. Like example, S corp has a limit of 100 investors, but for the C corp there is no cap. Like example, there are very big investments where thousands of people go and invest $10,000, $20,000, $10,000, $20,000. So there is no cap on number of owners can invest in a C corporation. And C corporation always, as C corporation, it has a liability protection. So owners are not responsible for any business liabilities, and the owners don't need to pay personal taxes on the business, on the C corporation profit, because C corporation directly pay their taxes at 21%. In S corp or LLC, whatever the profit business makes, owner is responsible. But C corporation, entity itself is responsible to pay taxes, and it is lower taxes, 21%. And if you are not looking to take the money out, if you're not looking to take the income out of your business, then C corporation is good. If you want money from the C corporation, because C corporation has to pay 21% taxes, and if you take any money as a dividend, you are responsible as an individual to pay taxes at your applicable tax rates for the dividend whatever you received. It can be 20%, 30%, 40% at your tax rates. So which may cause you double taxation. So company paid taxes, again you are paying the taxes. So if you're thinking about taking the money out, C corp is not the right option. And if you are thinking about more number of investors, maybe some 500,000, there is no cap, then C corp might be a better option.
So when we started this discussion at the beginning of the show, you mentioned there about some complex structuring in the right. So what is that complex structuring, and can you please explain about it?
Sure. So as we discussed about few legal structures, legal entity structures. So there are some, now we will get into the more complex, where it is a mix of different types of entities. So how does this work? You can mix, there is one hybrid structuring we can use, which is LLC plus LP combination. LP is a limited partnership and LLC combination. So what happens? An example, if you remember earlier we discussed about limited partnership. There are two types of partners, general partner and limited partner. General partner is exposed to the risk. If something happens, he is responsible. So what we recommend is to mitigate the risk, to mitigate everyone's personal asset. General partner, because he actively participate on day-to-day operations, he is responsible for any cases, any claims, any accidents at the business if something happens. So if the general partner itself is an LLC, an example, you and me want to invest in a real estate property, in real estate development. I want to be a general partner, you want to be a limited partner, where you just invest money, you are not responsible for anything. If something happens, you will lose this investment. But me, I take care of day-to-day operations, I take care of all risk, I take the management decisions, and I take more percentage of profit share, because I take more responsibilities, more risk. And if something happens to this business, if some accident happened at the property, the other person can file a case on me personally. So after all my efforts, my personal assets are at risk, but you are also partner, but you are not at risk. So there is a mitigation for this. Instead of instead of directly I am investing, I can create an LLC, I can incorporate an LLC, that LLC will invest in this business as a general partner. Someone wants to file a case on this real estate development, what we are doing, you and me. You are not responsible. So then they can file a case on general partner. Who is the partner here, general partner? This is a one more LLC. So again, we are putting a roadblock. Yeah, he cannot come across LLC. So this is a combination. So at the end, from the beginning, as I said, every person with a lot of efforts saves a lot of money, build the assets, wealth. If you don't plan properly, if you don't structure it properly, you are at risk. Many people do it with very limited knowledge. They might do some Google, or someone might have told some information. Based on that, they take their decisions, but they get into the problems. You don't know when the problem will come, but only in the future when the problem will come, then you realize, hey, in the same example, if I personally I'm building a big construction. We are building some 10 floors proper building. Something happened at the property. Someone wants to file a case. If I am the general partner, I am at risk. Why do I want to take a personal risk? So with this one additional LLC, I can mitigate my risk. So this is a very, very asset protection strategy for real estate developers who are the general partners in general.
This is very good, important point, Andy. This is I can say this is expert advice. There is a lot of complex structures involved to minimize the risk.
Yes.
In different kinds of natures of business. So this definitely you need an expert advice, Andy. So please don't forget to take an expert advice before doing any of these structurings, especially involved a different nature of businesses. Thank you, Andy. So it's a completely, I can say, complex structuring, definitely.
Yes. But this, I believe that people need to understand this, but if we understand, they don't do the small mistakes. The small mistakes may cause heavily in the future.
Definitely, because when you have a personal risk, definitely it's something that you have to take care of. Because
yes.
we never wanted to have any personal risk when it comes to business, right? So we have to protect it for sure. Yes. So Intikmandu, you mentioned about like LPs and how LLCs, like as a general partner, how you can invest from LLC, all those things. Like, is there any other things that you want to mention in like the same kind of business?
Yes, I want to talk about one more complex structure. So right now we discussed about setting up of two entities, LP, LLC. So now I want to talk about three entities, three LLCs. Two LLCs, one operating company, which can be an S corp or any corporation. Okay. So how does this work? If you are an active investor in the real estate, based on what people do is they create one LLC, everything they do under that, which is wrong. So you always need to diversify your risk, mitigate your risk, diversify your properties. Don't put all eggs in the same basket. So always you need to look into that, how to do the risk mitigation, how to optimize tax strategies, how to save the taxes in a legal way. So here what I want to say, first one, if you're this is only for the people who are very active investors. It's not applicable. Whatever I'm saying, don't get confused if you're a just starter or you are not an active investor. Okay. So if you are investing anything for long term, as I discussed earlier, if you're a long-term investor, buy and hold it, then it's called buy and hold LLC. Just first LLC is for buy and hold. The second one is fix and flip LLC type. Fix and flip LLC type, and that is also an LLC, just for terminology. If you want to do a trading like or flipping, so you want to buy a property, you want to do some upgrades, you want to sell it back, or you want to buy a property maybe in sometimes bankers sells properties because of defaulters. So if you are buying something like that and you buy it and you sell it again fast in the market, in those cases, if you are buying a property for a very short term, then put it in a separate LLC. Don't mix with the long-term objective investments, because always there are different types. In the short term, you will get a short-term capital gain, or it can be short-term income. But in the first step of LLC, it is a long-term capital gain. So split your assets. What is the objective of this asset? Long-term, short-term. Long-term one LLC, short-term second LLC. Then the third one is operating company. So the operating company is when you have an assets, someone has to manage the properties. So you can create one corporation, which can be an S corporation or C corporation or any corporation where your tax structure can be optimized. These properties, in the first and second, you have some properties. You want to maintain those properties. You can give this management to this third company, which is an operating company. So this way, in operating company, you don't have to pay a lot of taxes, because if it's an S corp, you don't have to pay taxes on your income. You don't have to pay social security taxes on your income. If at all, if you do the same operations in the first LLC itself, you are going to pay taxes. Also, you are going to pay social security taxes on your income. Yeah. But because of this structuring, long-term assets LLC, short-term assets LLC, the third one is operations LLC. So if you have all this, so then you can optimize your structuring, and you can optimize your asset protection. You can optimize your tax structure.
So definitely, as you said, this is a definitely different level of complexity for the beginners.
Yes.
As you said, please, that is why you definitely need an expert advice. And if at all, if you are planning to invest in real estate, and if you have any doubts on structuring, so please contact AG Fintax. Anil Garu will be happy to help you, and don't get confused. And because of lack of knowledge, you don't have to stop doing anything. There are always experts who are there that can help us in any way, because that is why they called experts, and we need expert advice. So, but as Miro explained చేసేటప్పుడు, when you are explaining about 3 company LLCs, I was thinking in my mind, don't you think all this is an expensive proposition అనిపించింది?
Definitely, Andy, it's a good question. It may cost some money, but it help you to protect from bankruptcy. We don't know what's going to happen at any point of time. You always need to maximize asset protection and plan for a tax efficient way by structuring your real estate investments. It may cost, it's a one time or there may be cost, but the return on investment is too big if something bad happens to you. So you cannot forecast, you cannot even vision if something may happen. You don't know. This because that's called as accident. Accidents, you don't know when the accident will happen. If something happens, the small cost, whatever you incur, that will help you in a bigger way. So considering the asset, maybe if your asset may be some hundreds of thousands of dollars or millions of dollars, it is absolutely worth of spending couple of hundreds of dollars to design the structure or to incorporate LLCs and to protect your assets. You have a peacefulness. If you think about saving of $100, $500, $1,000 to maintain all these assets and everything, if something bad happens, entire all your savings, hundreds of thousands of dollars or millions of dollars at risk. You may be at risk of bankruptcy.
Yes.
So do you want that? No, we don't want. Yeah. It is just like if example, you got a car, Tesla X, you got a car for $120,000. Do you pay insurance? Answer is yes. People pay insurance. Even you buy a $20,000 car, $10,000 car, you pay insurance, correct? So in the same way, this is an asset, hundreds of thousands of dollars of asset. And car is a depreciating asset. Real estate property is an appreciating asset. It's a good asset. So when you're ready to spend some money for a car, which is a depreciating, when you're trying to protect your assets, and you spend thousands of dollars per year, couple of thousands of dollars per year, just to save some $20,000, $50,000 car. When you have some hundreds of thousands of dollars of asset, why don't you spend couple of hundreds of dollars per year just to maybe filing a separate tax return or to incorporation? So don't be conservatism. Don't be conservative to save tax, to save small couple of hundreds of dollars to create an LLC.
Completely makes sense, Andy, and it definitely need protection for any risk, because it could be a car, it could be a business, anything is prone to risk. So risk anadi eppudu ela vastundi anedi manam cheppalem kabatti, so don't think of a small or little money that which can give you a lot of advantage if at all, if any risk happens, and it gives lot of peace of mind, Andy. So don't forget to cover your risk anytime. It could be your life, your business, anything, and you always need protection. That is what the expert advice today from Anil Garu. Thank you, Andy. Anil Garu, so that completely more and more complexity of the discussion actually.
Yes.
So there are quite a handful of structures, and we just discussed. There are sole proprietorships, LLCs, C-Corp, S-Corp, and limited partnerships. And there are a combination of LLCs, combination of limited partnerships and LLCs. So different structures we discussed. Is there any more that you would like to add, Andy?
I would like to add only one more, because we covered so much. We started with the basics to complex structures we covered. So I want to bring in, I don't want to explain this in very detail, but I want to bring some awareness. So there is one more structure called REIT, Real Estate Investment Trust, which is not so popular, not widely popular, but still it is very actively many people invest the money. It's a trust. You have all your assets in a trust, and it has all the trust rules. It has separate protection, but I'm not getting into the more complexity because that itself will take a lot of time, 1 hour to explain this trust. Trust itself is a complicated topic. We tried to explain some trust in our previous shows. So it's a different concept separately. So, but just I want to bring in awareness. Yes, there is one more structure. It's called REIT, Real Estate Investment Trust, and it is also very efficient and secure way to protect your assets. So you are not responsible, but you are protecting all your assets in a trust. So, but I don't want to, but just you can look into the details, or otherwise you can refer to my old live shows in TV Asia where we spoke about different trusts.
Yes, definitely, Andy. TVAsia Telugu is available in Dish Network, World BBTV, YouTube, Facebook, and website. So please, whenever you have some time, please log into one of these channels and you can watch previous shows. So which will give you a lot of idea about this tax planning and all those things, Andy. Okay, Anil Garu, we discussed so many things today about real estate structuring. So can you please summarize all of the above, like whatever is the point that we have discussed, and what are your takeaways for today as an expert advice?
Good, sure, Andy. As you said, each individual person to person, the strategy will change. So don't take any decisions just based on your Google research. So talk to an advisor, get a proper appropriate guidance, and always think about the long run. So you people, when you are buying your first asset, you should think about what is my plan in the long run. Are you going to buy more assets, or it's only one time, it's only one asset, is one or two assets, it's enough for me for the lifetime, or you want to buy more assets? I know many people, every year they buy one real estate property, one from their personal and one through their retirement funds. So every year they buy one or two properties. So, but in general, think about what is your plan. Do you want to build your wealth on the real estates, or you just want to have only 1 or 2 properties in the lifetime? Rather you build, rather than building all your assets and in the future converting or reincorporating all the different structures, rather than doing like that, plan from the beginning. Do from your baby steps. As when you are buying first property, second property, third property, if you know what is your end goal, what is your need, based on that you design everything, design your structure. And I know that initially it may be an expensive, it may be a time consuming, but based on your goal, based on your need, structure your real estate investments in a right way from the beginning, so that you don't get into the problem later, or you don't carry a lot of risk in the long run. So, and each type has pros and cons. Sole proprietor, LLC structure, LPs, or S corporations, every structure has a pros and cons. Please work with your tax experts or legal attorney for your to look into your unique your personal case and take their advice. So this might not be your own specialized area, so go and talk to your professionals who can help you in this scenario. Thank you.
Yes, yeah, you don't have to be a professional, you don't have to be an expert in every field అండి. You always can get expert advice. సో చూసారు కదండి, ఇదండి ఈరోజు మన టీవీ ఏషియా తెలుగు టాక్ షో విత్ ఎక్స్పర్ట్. ఈరోజు ఎక్స్పర్ట్ అడ్వైస్ చాలా వచ్చాయి మనకి టాపిక్లో. సో ప్లీజ్ మేక్ షూర్ దట్ యు ఆర్ టేకింగ్ రైట్ ఎక్స్పర్ట్ అడ్వైస్ బిఫోర్ స్ట్రక్చరింగ్ ఎనీ ఎంటిటీ. అనిల్ గారు, థ్యాంక్ యూ సో మచ్ అండి. ఇట్ హ్యాస్ బీన్ ఎ వండర్ఫుల్ డిస్కషన్ టుడే. సో నెక్స్ట్ వీక్ మళ్ళీ ఒక కొత్త టాపిక్ తోటి మళ్ళీ కలుద్దాము. So thank you so much for giving us so many expert advices, and which we don't know, and we don't have to be professional in this area, because as the experts like you are always there to help us. Thank you so much andi. Next week malli inkoka topic toti malli kaluddam andi. Bye bye and have a wonderful week ahead andi. See you.